Hello everyone and welcome to the channel. I am Hemal Bhatt from CredenceEdge Advisors. At CredenceEdge, we help individuals and business with tax planning, compliance and financial strategy in a simple and practical way. We have created this YouTube channel to share practical insights on income tax, GST, audit and overall compliance so that you can make better financial decisions and avoid costly mistakes. If you are someone who wants clarity but not confusion, you are in the right place. Comment CredenceEdge or DM me to get a free detailed guide. Now let's come to the main point. Now if you think income tax is the same as before, then you need to pay attention because the new Income Tax Act 2025 has brought structural changes which can directly impact your tax liability, your planning strategy and your overall cash flow. And the biggest issue is most people are still not aware of these changes. This is part 1 of our complete series on the new Income Tax Act 2025. In today's video, I'll give you a clear overview of what has changed. And in the upcoming videos, we will go step by step into tax slabs, deductions and practical tax planning. Let's first understand what exactly is the new income tax framework. The government is gradually shifting towards a simplified tax system. The focus is lower tax rates, fewer deductions, simpler compliance, and this is why the new tax regime is now becoming the default option for many taxpayers. So the entire approach of tax planning is changing. Now let's understand the major changes one by one. Right? Number 1, that is new tax regime becomes default. Earlier you had to opt for the new regime. Now the new regime is the default and you have to choose old regime separately if you want it. Second point is reduced importance of deductions. In the new system, most deductions like 80C, 80D, HRA are either removed or restricted. So traditional tax saving investments are no longer the main focus. Number 3 is the lower tax rates. To compensate for fewer deductions, the government has provided lower tax rates. So instead of saving tax through investments, you save tax through better rate structure. Number 4 is standard deduction continues. One important relief is that standard deduction is still available, which gives some benefit even in the new regime. Number 5 is change in tax planning approach. Earlier, tax planning was equal to investments. Now the concept of tax planning has shifted to structure plus strategy. This is a very big shift. So what does all this mean for you practically? For salaried individuals, it is less dependency on deductions, need to evaluate salary structure. For business owners, this is more flexibility but needs structured planning. For freelancers, it's simpler taxation but risk of overpaying if not planned. So the same law impacts different people differently. Now let me tell you the biggest mistake people are making. They are blindly switching to the new regime without calculation. Just because it is default does not mean it is better for you. This is where most people lose money. At CredenceEdge Advisors, we focus on practical tax planning, not just assumptions. We analyze your income, deductions, and financial goals before suggesting the right approach. If you want a detailed comparison and personalized suggestions, comment CredenceEdge and I will share a free guide with you. Also, this is just part 1. In part 2, I will explain old versus new tax regime in detail with examples. So make sure you subscribe and don't miss it. Thank you.